Let's now move to a stalled correction long. So far we've covered a snake up, a snake down. We're looking for the one move to the base, if that makes sense, double on the upside for the target. The real classic things we're looking for is volume starting to build throughout the consolidation, starting to peak as it starts to break the consolidation to the up or the downside. We'll find these often in things like indices and major currency pairs. They're a classic trading pattern. We can live off these. We literally sit there all day and play these kind of trades on 15-minute and 60-minute charts. The stalled correction long kind of combines two strategies. It catches a sentiment shift and an explosive breakout. Now, essentially, the strategy is this. We're waiting for a pivot, which means essentially what?
Changing the colour bar.
Yeah, it's a shift, isn't it? It's a reversal. It's a shift from either selling to buying or buying to selling. We're looking for that pivot. After the pivot to form a consolidation. What essentially that means is we've had a market shift in sentiment, but then a pause, a kind of a think out, what are we going to do next type thing. So when this consolidation happens or this think out moment, we then expect to see an accumulation of builders, of buyers or sellers, depending on what's happened after the pivot. So we see a pivot, we see a consolidation, and then we'd expect to see, if we do, a breakout from the consolidation. One of the things you've got to be aware of as a trader is if the price action does not break out very convincingly through the consolidation, that can also be a time to reconsider the trade and maybe cancel the trade. Sometimes when a trade just gets through a consolidation and then just wavers, it may be likely at that point that it's just going to come and stop you out. So we may take the decision just to pull the trade off at that point. I want to see, two essential market dynamics take place. I want to see it go from here to here very quickly. In other words, go from a tight range to an explosive breakout. And if we're not really getting that and it's wobbling along, sometimes it's more prudent to scale out of the trade, sell a bit of it, move our stop up nice and tight. So if it does take us out, then at least we lose a minimum. There's nothing wrong with doing that, amending that trade plan as it doesn't meet our initial criteria. If the consolidation is bouncing off a major moving average, again, that would be a good choice. Let's jump to the diagram here, and we can certainly see that here's your pivot, and you expect your pivot to break down through the moving average. When it starts to, as you can see at this point, let's just focus on it, creates the pivot there. And then, of course, up the stock continues to run, forming a consolidation. Brilliant if it's broken through the moving average, then runs up towards the moving average, form a consolidation through it, and then breaking up through. I mean, that would be an absolute classic play, and that would be certainly something we'd want to play. And then, of course, we'd expect the run to be at least twice of the original base. Take profit when we start seeing reversal bars, which are either small or, again, learning off some of the rules that we learned in the point scoring, where the bars become oversized after the breakout. Obviously, this essentially means the crowd's in play, positions likely tiring, and therefore good time to close the position. So let's have a look at some examples of the stalled correction long. Well, first of all, we've got Gus here. You can see the pivot. Notice how the pivot, just as exactly as it did in the last example, it's doing two things, isn't it? It's breaking down away from the moving averages where it's forming its pivot. And would that be fair to say that we've recognized a trading strategy we may know there?
Power play.
That's right. It's a power play. Brilliant. Said from the voice of a man who's obviously traded the odd one or two. That's right, yeah, it's a power play there. We know those well, and it's pivoted straight away, and then it's consolidated, the think out, and what's going to happen next. Then it breaks to the upside, and then of course we could see another price pattern. What's happening up here as it's tested up and then dropped down?
Crowd volume.
There is some crowd volume. Well, actually, that crowd volume here. Let's just grab the pen again. The crowd volume here is really driving that bar and this bar, gapping as it moves, yes. But what's this?
High test.
The high test.
It's a high test, isn't it? Yeah, it's exactly that. It goes up, comes down, and therefore, as you can then see, the stock then starts to break away.
Greg, just to clarify, crowd volume, because I sometimes get blurry about this.
Yep.
Goes with the big bars just before the reversal of a move.
Yeah. The difference between prop volume and crowd volume, prop volume starts a move.
Yeah.
So if a move hasn't yet started, in other words, if a move is underway, well, you can't really consider that prop volume. Prop volume is the early initiator of a move. Crowd volume is, you read about it in the Daily Express and you're jumping in sort of a week later, like the rest of the crowd is. And of course, it's then topping out, big extended bar, the masses are in, the institutions, the professional traders are selling out. Yeah. Okay, Lloyd's, another example here. You can see it's pivoted down. Exactly the same thing, down through the moving averages, consolidated through, and this time you can see it's gapping up, running to twice the target. An absolute perfect strategy. If you can find a pivot below a moving average, coming back up into the moving average, consolidating along, tremendously powerful trading strategy. Certainly one that you'd want to get decent trade size on, obviously risk managed, and then run it for twice the existing base. So really the conclusion on the stall correction long, it's an ultimate play. I mean, it's a real prop trader's play. We're looking for, all traders, as we said, are looking for breakouts. We want to use protective stops. We're combining the power of the pivot as well as the consolidation. And the consolidation you really want to consider as a loader. In other words, it's loading buying or selling action into a play, which could then burst and steam out from the top or the bottom, depending on whether it's breaking down or up. The pivot just sets the direction. And generally a pivot ends either a selling move or a buying move, reverses it, a pause for a load, and then as we jump through into the consolidation, it gives us a nice move. Okay, stalled correction long practical. Let's have a look here, see if we can find the intrepid stalled correction long. So everybody heads down, focus on your notes here, and see if we can find the pivot and the consolidation and then the breakout. Okay, David.
October the 2nd.
Yeah, we've got certainly one down there on October the 2nd. We've got another one, haven't we? Actually got one here and a consolidation. We've got another one here and another consolidation. Yeah, you're absolutely right. You had a pivot here and then it consolidated and ran a little bit. Then it's come down, pivoted again, and it's consolidated, and this time it's run a little bit.
Earlier one, right at the beginning of the chart, would you consider that?
28th.
Yeah.
Early on down here.
Yeah.
August.
Or does it not meet the requirements?
It's okay. It's okay. The only thing I wouldn't like about the pivot is that this buyer day here, let's kind of zoom into that. See this buyer day here. It doesn't break the high of this. So I don't like the pivot so much, although it does do it. It does work out. Pivots I like is where you've got this selling range here, like this one David just found, and then when it's broken through the high of the seller day. That's what I want to see. And classically on this one here, here's your selling range, here's your pivot off the 50, okay, through the moving averages, runs up, and this one just sits in the moving averages or just above, and then it breaks away. And that for me would be the ultimate play.
Right.
Yeah? What about BRCM? So we're looking pivot, then we want to find consolidation. Tony?
Just after 2000.
Yeah, it's around here, isn't it? This one just breaks through. It's really the second bar that's really clearing here. So unlike the last examples where the first green bar broke through the high, it's really not. The first one doesn't, but it's close. The second one does. Then we get the consolidation, which is here, and then off it goes. So pivot below moving averages, run to the consolidation, break up through.